And we are back looking at the top performers for last week. With regards to price, Homes Africa was the best performer, up 17.39% over that particular week, followed by NCBA. This is the NIC-CBA merged entity, which traded up 10.17%. Unga was up 9.35%, Express 9.23%, and eGoods 7.49%. We'd covered three of these stocks and what was happening, or what was driving the price performance. Let's look at Express and eGood. Robert, what was happening there?
Those two are counters which I've never understood.
It's probably speculative.
It's most likely speculative.
Yes.
And would be a good thing if it's people who are out there trying to test how to invest in
how to invest. Maybe they're the ones who are...
Yes, and I'd say it's same way like we're saying is that even with Home Africa.
Yes.
If you've got 1,000 loose shillings right now.
Just put it there.
Just put it there.
Okay, interesting. Now maybe we can just switch over to the amounts that were traded last week, because we did see the element of the rate cap conversation. This is a discussion that came out overnight on Wednesday night. On Thursday, the communication was made public, and the president sent back the Finance Bill 2019 to Parliament, saying get rid of the rate cap conversation. Parliament was due to go for recess, but on that particular day, we did see stocks trade up 5%. Equity Bank up 5% on that one day. KCB up 5%. Cooperative 5%. Barclays 5%. What's your read on this particular?
Again, like I said,
yes.
The good thing we keep forgetting is that when there's a trade,
yes,
there's a seller, there's a buyer.
There's a seller, there's a buyer.
So the question is, why are we so concerned about who is buying? Should
yes.
we be concerned about who is selling?
Who is selling? Yes, we should also be concerned about who's selling. That's a valid point.
So there's an equal number of sellers as there were buyers.
Actually, the sellers are... The sense that we've gotten is that it's been one or two huge sellers, and it's people who've been waiting for this rate cap conversation to happen for a very long time. And then the demand is sort of mixed between the foreign demand and local demand. And I can understand the element of the local demand, because local demand had been allocating funds to government securities as well, similar to what the banks were doing. But then this does change the dynamic for revenue appreciation and capital appreciation for the stocks.
Are we sure there were actually just speculators who are exiting?
Not speculators, people who'd been holding the stocks for a while and had been waiting for the rate cap.
So why? If there are many coming in,
you've made your money.
And the suggestion,
yes.
What you were suggesting was that if the rate cap goes, then performance of the banks would go up. But somebody doesn't think it will.
Yeah, somebody doesn't think it will. Either that, or maybe they came in at 26 and are exiting at
yes.
40.
And like we always say, the question becomes is that we can't really say much unless we know at what price they came in.
Okay.
And also could just be somebody rebalancing his portfolio.
What would you do with that information? Last week, rate cap conversation comes out, banks are up 5%, some of them already up 10%. What would you do with that information?
If I'm in or out?
If you're out.
If I'm out, I stay out.
You stay out. If you're in?
I exit.
You exit.
Yes.
Take advantage of the
profit
taking,
that, yes.
and then you come back again.
Then I come back again.
And that makes absolute sense, because we suddenly expect like sort of a knee-jerk reaction. That's what yes. you're saying. A bit of excitement, and everybody figures out, okay, maybe this is not as lucrative as we thought. Yes. Okay, fair enough. We were discussing this a bit earlier just before we came to the show. The question on the fundamentals of the banks. Do we think the banks will actually be prudent and conservative with regards to reviewing the cost of credit in Kenya?
They can't. You see, the whole reason why the banks go and give the money to the government is because the government is safer.
Yes.
Now, there's no way I could give money to a trader who is a higher risk and give him at the same rate as I would give government.
That's true.
So if I'm willing to give government at 10, 12%, definitely I'm going to give it to somebody else at 18 or 20 or 21%.
Yes.
But I don't think it's a bad thing. I believe at 14% what happened was it's not what this country, we comfortably can survive at 20, 21% interest rate.
Yes.
Yes. So long as you're doing business with the money. The problem is that some of us are using it for consumption.
All right.
If you're using it for consumption, then
forget it.
Then forget it.
Yes.
But as a trader, as somebody who is actually investing in something, I think getting 22% return on turnover is very easy.
Is it? What businesses are this? I'd like to get into them.
I have a pet example.
Okay.
And it's the potato.
All right.
Follow the potato from Jambini.
Yes.
To the time it gets sold to a chip shop.
Yes.
It's actually appreciated by almost 100, 200%.
Wow. Fascinating.
In a day.
Fascinating.
And that's why your mobile money platforms are making money. Because somebody can borrow in the morning is comfortable paying 10% because he's making 100%
Yes.
for the day.
Yes.
And most of the mobile money companies will tell you a very large percentage of their borrowers pay by end of day.
Okay.
They do not hold on to the money for a week. They don't hold on to it for a month.
Turn it over.
And that's what they do.
And then
it's
you
how
pay
they
it back.
did it with Shylocks.
Yes.
That's how you did it. You arrived at the Shylock in the morning, you left him your phone, he gave you money, you went and traded, you came back in the evening,
Yes.
you paid him, you
And
picked your
moved on.
phone,
Tomorrow.
and you come
said-
and do the same tomorrow.
That's true.
And that allows you the flexibility that if the market you are in today is not lucrative tomorrow, then you have no credits.
You have no.
Credits that's an overhead on you.
Okay, fair enough. So do you get the sense that the demand for credit, because I like the element of the example of the Shylock, or rather the mobile lending and its predatory pricing, because it's very expensive. But then the amounts that were extended as debt were very little. Now, when you come to the banks and the banks have larger balance sheets, do you feel this? Do you get the sense that the business community has the requisite demand to be able to take on this additional money that should be expected to come into the market?
Not in the way the banks behave today.
Yes.
The banks are hands-off, and I think that has to stop.
That has to stop.
The banks will have to start getting more involved in their borrowers' lives, in their savers' lives.
How? Do you even want your bank involved in your personal life?
I think I do. And it's interesting because more recent, some time back, I actually was sitting back and I actually penned an article in LinkedIn
All right.
on whether KRA basically are failing by not sitting on the boards of companies. Yet KRA is actually a 30% shareholder in your business.
Yes, it is.
Any business.
That's a good point.
So at 30% shareholding, shouldn't they have a seat on the board?
No. Oh, yes, it
Yeah,
depends.
with 30% they should have a seat on the board.
Okay.
Okay. So the same thing I ask is that if the bank is funding me to the level where 80% of the money in my business is the bank's money,
Then
then shouldn't the bank get more involved with what I'm doing with the money?
that's true.
Or if not just what I'm doing with the money is, can they leverage so that I can get certain services at a reasonable cost?
Yes.
Because if you're funding 50 people who are in the transport industry, why stand aside?
We need more value add from financial services.
Why not
Just-
sit in? If your bank has 50 customers and they walk to one of the vehicle companies and says, you know, we're bringing you this number of customers, please give them a discounted rate.
Exactly.
And that's what is lacking. Our banks are still too traditional. They still think their business is to borrow low and lend high.
It's such a fantastic business. I wish I could be able to just take money from you at 2% or 3%, which is what the big banks do, give it to you at 13%, and figure out my costs in between. That would be such a lucrative business.
And then you still complain about a 14% rate cap.
Oh well, let's see how that goes. But then now I want to come back to what we expect for the week going ahead. So today, just before we came to the show, we've seen 16 million shares traded in Safaricom, Equity Bank 14 million shares, KCB about 4.4 million shares. We're still seeing a bit of interest and dominance in the banking stocks, and I think the key date we're waiting to hear is the 29th of this particular month, because that is when MPs come from recess. They have till the 1st of November to evaluate whether the decision from the executive office makes sense or not. Do you have any thoughts with regards to if anything else will dominate trading this particular week?
Always as we come towards the end of the year, there'll be a run on the banks.
A run on the banks for year
Don't
end.
forget all our banks have the same year end.
Yes, 31st of December.
So whoever taking positions now is because whichever way it goes, the dividend you're looking at or the return you're looking at is based on the performance until 30th of December, 31st of December. Whichever way the rate cap goes, that will not have much of an impact. So you go in today and hope that the banks have actually made increasing profits as they've done before.
Yes.
And it's easy to tell because all you have to look at the last 3 quarters, they have done extremely well.
Yes, they have.
So there shouldn't be much of a problem with the fourth quarter.
Okay.
So most people who are going in are most likely going in for the fact that the banks are coming towards year end.
Okay.
The interesting ones would have been Safaricom, as usual. Okay, the problem with Safaricom is that they have so many shares in the market that
Yes.
they will always be the mover.
Yes.
Yes, they'll always be. It's a share that everyone is interested in.
And it's 50% of the market. It's 50% of the market.
Yes.
Okay.
And I think we need to start excluding it.
No,
See, basically when we say there,
if you exclude, okay, fine. If we start to exclude it, what are we going to include? Because from even the price movers, you can give me commentary on some of them. So,
because there'll always be a mover. So for me, that's interesting that there's been a lot of movement with Safaricom. But like you said, possibly it's people who've realized.
Yes.
They might have gone in at 12 shillings, at 15 shillings. It's time to get out.
It's time to get out.
And they know that with the rate caps, they might
Yes.
as well take the money and put it in the banks.
Yes.
Yes.
All right, interesting. So then, now when we're looking at the rate cap, we have looked at the impact on stocks and certainly expect a run on banks in the final quarter. That tends to happen traditionally, but now we do have an added trigger on that actually changes the fundamental way that the banks work. Are there any other particular sectors that you see some excitement as we head to the end of the year?
The interesting one is breweries seem to have done quite well.
Oh, breweries. Okay.
Yes. So I'm wondering why. Or is it because we're coming to the festive season?
Oh, could be. Maybe everybody's like, before, buy one stock, buy one beer, drink one beer, buy
Yes.
one share.
I think what the rate cap would say a lot.
Yes.
Because don't forget, it'll also have an impact on our industrial and commercial sector.
And it does release money into the economy. So people could potentially be drinking more.
Yes, but let's look at it this way. If the interest rates go up,
Yes.
then what happens to our larger trading enterprises?
That's a good question. What are your
The
considerations?
cost of credit goes
The
up for them.
cost of credit goes up.
So that will affect their profitability.
That element of operational
Yes.
expenditure.
So the question becomes, do we want to move money towards the SME while denying it from the larger
From
industries?
the large industries, okay.
Yes.
So there's excitement, yes, but then there's a need to actually be a bit more fundamental and a bit more conservative in your observations and just see what do all these decisions mean for you as an investor. All right, I like that you've brought out the element of looking at the cost of debt for corporates. Now, you are a personal financial literacy coach.
Yes.
What does this cost of debt mean for people who are invested and have used debt to make investments?
If they've done their math right, they should be okay.
Okay.
And let's hope that even after the rate cap is raised, the banks don't dash to adjust their other loans.
Okay.
I hope the people who already got loans should be able to survive for a while before they have to deal with it.
Yes.
Because you see, for example, if you're in real estate, you can't wake up tomorrow and increase rents.
That's true. You need some time.
Yes. If you're in manufacturing, the same thing. So what we need to look at is, does the raising of the rate cap also mean that the banks will then pay us more for our fixed deposits?
Okay.
If they will, then that's good. Then.
All right.
Then basically, those people who are getting the handshakes we're talking about,
Then they can go and put.
at least you can go and put your money into a fixed deposit and get a better return than 6%.
That's very true.
Yes.
All right. We're coming to the close of our show. Is there anything that we have missed out that you feel is pertinent to this conversation that we're having?
The interesting one is, like I said, Home Africa and...
We can put up graph number 3. That's Home
Yes.
Africa. All right, as they put it up.
The share is, there's no major announcement. So that's the interesting thing. There's no major announcement
Okay.
anywhere. But you can see the volumes that have been trading on Home Africa are quite high.
Oh, from September, actually.
Yes.
From 9th of September,
Yeah.
we have over about 500, close to 600,000 shares traded.
Yeah.
All right, so that's what, there's a bit of activity happening there
Yeah.
and going up.
So there's quite a bit of that, and you can see then it's actually triggered something more recently in the last week.
In the last week, okay.
Yes, and there's a run for it.
There's a run for it, and that's at 0.54, and it did touch a high of 0.65, 65 cents
Yes.
over the year.
And what I say is that a lot of times we look at it in terms of the absolute figure
All right.
and not the percentage.
Not the percentage, okay.
If you're looking at a 17% increase,
Yes.
that means if you put in 100,000, then you're left with 17,000 shillings
Yes,
at the end of that week.
okay.
So if somebody is actively trading, then some of this
Pay attention to volumes.
penny
stocks.
stocks.
So our favorite penny stock for now is Home Africa.
Home Africa,
Home
yes.
Africa. All right. And then NCBA, that's the final chart that we're looking at there.
Yes. I think that one you can see the way the market reacts to one was the announcement,
Yes.
which was in August. You can see there was a slight peak from that. Then, as usual, towards closing,
Yes.
there will always be a shoot.
There'll always be a shoot. Okay.
Yes. As
So
people just they've made their money and they're getting out.
and they're getting out.
Which tells you that we have a lot of people who basically are looking at, who trade specifically just for capital gains.
Just for capital gains. And
Yes.
that should be an interesting story. But you have to be
Yes.
active in terms of looking at the data from the market.
You have to be active, and
Okay.
again, like we say, if you're on the My Stocks platform,
Yes.
then
We
We do the watching for you.
You do your watching and thinking for us.
And then we send you the alerts.
Okay.
All you need to do is to call your broker and tell him to buy or sell.
And that is My Stocks Kenya. My Stocks in Kenya or My Stocks Kenya?
mystocks.co.ke.
mystocks.co.ke. If you're unable to think for yourself, not that we are undermining your thought capability, but mystocks.co.ke can be able to give you alerts based on what your investment strategy is. Now, today we have talked about penny stocks. Home Africa has been the best performer last week. And in Robert Yawe's words, if you put in 100,000 last week, you made a good 17,000, which you could have easily spent over the weekend without touching your normal source of income. Now, there's a lot of things that are happening here. There are fundamental drivers and there are also just technical drivers to look out for on the Nairobi Securities Exchange. It's imperative that you actually keep abreast of the information. mystocks.co.ke does certainly offer that kind of information for you, as well as insights and alerts. What are we expecting this week? A continued resurgence of activity on the banking stocks, and we're also seeing that picking up on Safaricom. This will be the key highlights for us this particular week as we await the 29th of this month when the MPs come back and decide. And for your benefit, if you're just joining us, the NSE has already closed. We have seen 16 million shares traded in Safaricom, 14 million shares traded in equity, 4.4 million shares traded in KCB. The key thing that we are seeing today is a lot of foreign sellers on this particular banking stocks. Demand is split between the foreign and the local investors. And for the final parting shot, 738.9 million shares have been introduced into the market for the NCBA merger, and it is trading at about 33 shillings. So something else to also look out for. Thank you for joining us once again as we continue to evaluate the conversation of debt, its impact on you as an investor and as a debt holder if you are a consumer of debt. Join us again tomorrow at 2:30 as we evaluate the NSE and give you stocks. If you haven't already, look out for Homes Africa and see if there's any other penny stock that you want to buy. Let us know. Tweet us on our handle, and that's Metropole TV. Thank you once again and good afternoon.